9 years ago, Vijay Boyapati wrote an article that is considered as one of the foundational texts of Bitcoin philosophy, a roadmap for how Bitcoin would monetize. And today, almost every prediction that he's made is coming true. In this conversation, we cover why Bitcoin is obviously superior to gold, nation states entering the race to own Bitcoin, and we explore why the path to becoming a global reserve currency is no longer a fringe theory, it's a path-dependent mathematical certainty in 2026. And stick around to learn about Bitcoin's endgame. What happens to the price when the world figures out that there's no exit back to fiat money? If you're not bullish after this conversation, I don't really know what to say. All right, let's dive in. Vijay Boyapati, welcome to Bitcoin for Millennials.
Hey, Brian, it's great to be with you.
Your article, The Bullish Case for Bitcoin, I think is considered one of the big, three foundational philosophical texts in Bitcoin. In the article, and eventually also in the book, you kind of outline the 4 stages of money. So you start at a collectible, you move to store of value, then medium of exchange, then unit of account. In 2026, where do you think we are on that timeline? Are we really into full-on store of value yet, or do you think that's still early, or even moving to medium of exchange already?
Yeah, that's an interesting part of the book that you jumped to. I actually think, I don't want to brag or anything. I feel like that was one of the big contributions of the book, because when I started writing and thinking about writing the article, there's a big debate in the Bitcoin community about what Bitcoin was. And I think there's a lot of misunderstanding, not just in the Bitcoin community, but in the wider economics profession about money. What is money? Money is defined commonly as a medium of exchange, but it's very problematic because medium of exchange is one of the functions of money, one of the use cases of money. You use it as a medium of exchange. So it's very problematic to define it that way. And one analogy I like to give is to kind of define a car as a steering wheel. No, a car is not a steering wheel. A steering wheel is kind of one of the things you use in the car and makes a car useful, but it doesn't describe the whole picture. And when you look at the other functions that money can have, store of value, you went through them. It starts out as a collectible and eventually evolves to becoming a store of value, a widely held store of value, and then it becomes suitable as a medium of exchange, and eventually becomes a unit of account, which means that it's the thing that you price other things in terms of. Like when you go to the grocery store, right? Like if you live in the United States, you see prices in dollars. That's a unit of account. When you in Europe, you see prices in euros. That's the unit of account. So money, all market-based monies go through this evolution. And this idea is actually not original to me. I was just reprising something that a very famous economist from the 19th century, William Stanley Jevons, who's the father of marginalist economics, he explained this evolution and said, this is how gold became money. In the 19th century, gold was money. It was a medium of exchange. It was a store of value. It was a unit of account. It was everything that we think of as money today. And he said, well, how did gold become money? It started out as a collectible. It was just kind of this shiny rock that people thought was cool. And eventually, when enough people thought of it as a cool thing to own, it kind of became a store of value because people wanted it, and you could kind of hold it and keep your value through time just because other people valued it. And then when everyone owned it, it was a medium of exchange because you could use it in exchange when buying things. I think sorry for this diversion, but to get back to your original question, I think the longest part of this process is always the establishment of an economic good as becoming a store of value. That's where all of the time and energy is. Going from a collectible to a store of value, I think that can take a few years in our digital world where things happen quickly. Like in the earliest years, Bitcoin was clearly something like a collectible, right? In 2009 and 2010, there wasn't even a market price, and it was owned by cypherpunks who just thought, this is cool. Hey, there's this token that we can trade around. It's decentralized and no one can control it, but it didn't have a market price. That was kind of the collectible phase of Bitcoin. And then it slowly but surely transitioned to the store of value phase. And that process, I would say, took I don't know, maybe even 10 years, like from 2011 to 2020-ish, say, that's when I think Bitcoin became what I would call an incipient store of value. I wouldn't say it's a store of value yet, but it's becoming a store of value. It's a process of adoption. When everyone owns it, you can or a large percentage of the world's population owns some of it, then you can say, yeah, this is really a store of value. And the archetypal example of this is gold. Gold has been around thousands and thousands of years, and a lot of the world owns some gold. Like, there are a billion people in India, they own some gold. There are a lot of people in China, they own some gold. In the West, it's maybe less common, but, you know, a lot of people own a little bit of gold as a part of their investment portfolio. So gold really has this idea or story around it that it's a store of value because it's been a store of value for a long time. That process for Bitcoin has been dramatically accelerated because we live in a digital world and ideas can be transmitted at the speed of light, and people can acquire Bitcoin very quickly. So Bitcoin has kind of spread much more quickly than gold did. Like, when gold was becoming money, that took thousands of years, right? Maybe tens of thousands of years. We don't know when the earliest humans started looking at gold and valuing it. But I do think that Bitcoin is not yet an established store of value. It is still becoming that. And I think the process of becoming an established store of value could still take decades. I think that's where I see a timeline of, from here, maybe another, say, 2 decades. And then Bitcoin is truly a deeply established store of value. If you look at the ownership percentage on Earth, I think it's probably still single-digit percentages of people own some Bitcoin. And if you make the criteria a little stronger and say, how many people own a meaningful part of their savings in Bitcoin, it may be 1 or 2% of the world. So we haven't got widespread penetration of Bitcoin yet. And I think that process is going to take a long time.
Yeah.
Relatively speaking, yeah.
Kind of like those things together, for me, define what the asymmetric opportunity is. Because in our no one, including our grandparents, has seen the introduction of a new store of value asset that was superior to everything that all the other people used or everyone used up until then, right? So I think that's where also the paradigm shift is. Like, it's very hard to compare it to what you know, because this thing is so different on multiple levels that if you do the work, you know, then you see the opportunity that it is. There should be more people that figure this out. You know, but it's slow.
One thing I like to say is that information travels at the speed of light, but understanding does not. And it does take time for people to understand that there is a huge comparative advantage here. Like, this is the one thing about network effects that's really interesting, is that when you have an economic good or a service which has a network effect, you can have a competitor which is better, even significantly better, and it doesn't mean that the original service or good is going to lose all its usage immediately, because this network effect is kind of like a protective that prevents like loss of market share. And actually, you know, it's one of the advantages that you look at products which had network effects in the past. You could look at inferior services which maintain market share despite being inferior, like Microsoft Windows is a good example of this. They had a very strong network effect, and they had in the 90s was pretty inferior to its competitors in many obvious ways. To unseat a network effect, you don't need a small advantage, you need a massive comparative advantage. And thankfully, that's something that Bitcoin has. It has a massive comparative advantage compared to its nearest competitors.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control access across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. Multi-institution custody is the foundation for everything that on-ramp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now on-ramp is piloting flat, predictable pricing to make best-in-class Bitcoin custody and financial products more accessible than ever. Visit onrampbitcoin.com to learn more and sign up with code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. On-ramp, strength in many, simplicity in one. For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a longtime fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. A huge shout out to Relay for sponsoring the show. Now let's continue. I had a conversation once with a gold guy and also a Bitcoin guy, and he said he admits that Bitcoin is superior, but he said hold your horses because the central banks are still buying gold. And I think that's part of the network effect that you mentioned. It's like, yeah, it's just... No, what is this Bitcoin thing? I'm just going to keep on buying gold because everyone is buying gold. It's just the old idea of thinking about it. And that, again, I think feeds into the opportunity. Like, this takes a long time, but if you figure it out now and just understand that it takes a long time, that's where the opportunity basically is.
That's absolutely correct. And it should not be discounted that gold has a very powerful network effect. And gold has a very powerful, what you would call in marketing terms, brand. And the brand is just the history of gold that gives it this brand of like, it's always been a store of value. It's always going to be a store of value. That combined with its liquidity and central banks means that gold is not a competitor to Bitcoin that's going to disappear quickly. That's something that Bitcoiners sometimes don't understand. Like, they see Bitcoin and they see it's obviously superior, and those who understand it, you and I recognize this is obviously superior to gold. Like, back in the day when I was a gold bug and, I liked silver, I bought some silver bars. I don't know if you've ever picked up a silver bar, but they are incredibly cumbersome. And if you wanted to transport, say, even $5,000 or $10,000 of value, that's a really heavy physical brick that you have to carry around.
Yeah.
And imagine going through an airport and you want to carry not $5,000 or $10,000 isn't that much. If let's say you're a multi-millionaire and you want to transport your wealth to another country, you just cannot do it using silver. I mean, you can with gold, but it's very risky to go through an airport carrying gold. So you and I recognize there's a massive comparative advantage here, but it takes time, and this network effect that gold has will not be unseated quickly. It's a process, and it'll take time as people slowly but surely understand, actually, this is superior. I have some personal need that I have where gold will not fit that need. I need to use something like Bitcoin. And there are people in certain parts of the world which actually have to do this. Like Venezuela is a classic example of people living under a dictatorship trying to flee the country. Millions of people left Venezuela. A lot of them needed something to keep their assets or savings in, and Bitcoin was the perfect vehicle to do that.
You predicted the arrival of institutional capital. Now that there are ETFs and companies like Strategy that hold it and actually have an entire strategy and a certain goal, because someone like Saylor, I think he sees that future and the long time frame, and he's just acting upon it while everyone is totally misunderstanding what he's seeing. Do you think this institutionalization, or at least the start of it, does that change Bitcoin? Is the Wall Street version of Bitcoin different than people envisioned, or is this just an inevitable part of the path, basically?
Yeah, I think it is an inevitable part of Bitcoin's adoption. I mean, you have to realize that Bitcoin is eventually going to be adopted by people that you disagree with. And that's okay. That's what money is. Money is a tool that people who have very big differences politically or philosophically, they can still engage in peaceful trade with each other because they have this intermediary good which allows for that trade to happen. And money is one of the greatest inventions that humankind came with for establishing peace on Earth, so that trade didn't have to be necessarily direct, face-to-face, short, sort of geographically constrained. It could be done on a much wider scale and done impersonally.
It's funny when you think about it more like a philosophical way. If there is a neutral money, the exchanges in an economy would actually be about who has the better idea, who has the most value, right? I find that so interesting. Like if the money is distorted, the motivation and the incentives for people to create or contribute are also distorted. But when the money is neutral, then you can actually have what I think in my mind is just real capitalism based on merit, like free market society, etc.
Yeah, I couldn't have said it better myself, that the neutral money allows for true capitalism. We don't have true capitalism because the money can be manipulated. But I do think that this is a natural part of the adoption cycle of Bitcoin, that financial institutions recognize the value of this thing, and not just as like an investment, but they recognize it for their purposes. It is really useful as a form of collateral. Like Bitcoin is the best form of collateral because you can take possession of it really easily, and you can verify that you have possession really easily and cheaply. Like if you want to do a financial transaction with someone across the world and they have gold coin, like
or a skyscraper,
they can't post that as collateral. Like what confidence do you have that you can take possession of that asset if the transaction goes wrong? And so the fact that it's really perfect as a collateral asset allows you to use it as a foundation for building all of these really cool derivative products. And an example of this is, let's say you live in Bangladesh and you don't have access to the US stock market. There are derivative products that give you price exposure to the US stock market, but you need to post collateral. And what does someone in Bangladesh use to post as collateral? Bitcoin is the perfect thing to be able to do that. So I do think this unleashes like global capitalism in a way that was never possible before. And so we will see adoption from Wall Street because they'll recognize these properties and say, hey, these are useful to us. Now, there is this view from the early Bitcoin community that's very kind of libertarian in ethos. And, you know, I share those values that, hey, these guys are bad and they're going to co-opt Bitcoin and turn it into this Wall Street thing. I have the opposite view. I view Bitcoin more as a Trojan horse. We are, you know, putting the Trojan horse through the gates of Troy, and we are going to storm Troy, and we are going to export our values into this, you know, antiquated infrastructure, financial infrastructure. And it sounds kind of boring, but I think the thing that's most special about Bitcoin is that it's a neutral money that cannot be inflated. And that's a very powerful thing, because if you can't inflate it, you can't take control of it. Like the US government controls the dollar because it can inflate the dollar. Having that neutral money, I think, is going to change the structure and the values of the financial system, just in the way that it does for individuals. Now, I don't know if this has happened to you, but this is something I've experienced a lot. When a person gets into Bitcoin and understands what it is and starts saving in Bitcoin, it changes their worldview in a way. Like they become savers. I've seen a lot of people who were pretty profligate and didn't save and didn't really think much. They weren't very future oriented. And once they became Bitcoiners and they saw what Bitcoin was, it's a vehicle for building your savings over time that cannot be confiscated or debased. They said, hey, how do I get as much of my savings into this as possible? Like, what do I need to get an extra job? Do I need to sell my assets so I can buy more? It reorients your worldview, and I really believe this is going to happen to financial institutions from the inside out. So I view it as a great thing. I'm not concerned about this. I'm actually really excited about Bitcoin becoming part of the financial infrastructure of the world.
The only promise I think of Bitcoin is that it says, I'm just going to stay the same. Like my rules are going to stay the same. And therefore, the longer I stay the same, the more value and the more data is stored, the more trustworthy I get, which is kind of like this reinforcing feedback loop. And I think that is just something that brings so much clarity and transparency that people don't see that when they are in the fiat money world, because that is like a zero-sum game. They cannot even envision something like that to exist.
Fundamentally, Bitcoin is kind of a boring thing. It's just kind of a ledger that allows people to know how much value each person in the system is holding. But it's radically new in the sense that we have never in the history of humanity had a political institution that was immutable, that couldn't be changed by politicians or people in power. Now, gold came close, but gold failed because it has this Achilles heel that it's physical. And the physicality of gold creates a few problems. And one is like the centralization of like where people hold their gold, because it's very cumbersome to move gold around. So what happened was gold kind of became centralized in a few banks, and it's difficult to take possession of large amounts of gold. It's scary and it's risky. And where do you put it? Under your mattress? You don't want to hire like a whole army.
Well, is it real? I always think, is it real?
No, exactly. That verifiability, like there's a lot of fake gold. That's another part of the problem, the physicality of gold. Gold as money was the closest thing we've come to an immutable political economic institution in human history. I think Bitcoin gets us there. It gets us to an institution which could be immutable, and that's the radical part about Bitcoin. It's the fact that it's kind of boring money. Yeah, that seems like it's not that important, but the fact that it can't be changed or manipulated and it can't be politicized, that's the radical departure from the past.
Yeah.
There is a certainty to owning Bitcoin that you can't get really anywhere else. And a long time ago, like I referred to this before, when I was a gold bug, I bought some gold coins in like kind of not an online exchange, but like we have Craigslist in America, which is like a service where you can buy and sell things, and you just post an ad saying, hey, I'm selling this. And I remember actually how scary it was to go and buy a gold coin, because like you don't know if it's real. And actually the person on the other side who's getting dollars doesn't really know if the dollars are real. Like they could go to a bank and verify it, but it's like inconvenient. Whereas Bitcoin, if you trade something for Bitcoin, you have absolute certainty that you got the Bitcoin. Like you can look at your node and look at the network and see the confirmations. That level of certainty is something that's very unique to Bitcoin.
But there's a stamp on the coin, Vijay. So it's so funny, right? Like Bitcoin it's so rational. I just think it's funny how rational it is.
I don't know if you saw the debate between Peter Schiff and CZ, the former CEO.
Yeah, where he got out the bar. Yeah, but that's the point.
He got out a bar that looked like a bar of gold, and he said, "Look at this, it's beautiful. It's kind of heavy," and he gave it to Peter Schiff. Yeah. And then he made the point that this is a tungsten bar, and
he asked, "Is it real?" And
is it real?
That's and he said, "Yeah, I don't know." And that's the point.
That is the point. You don't know. You don't know that. And I thought he made that point incredibly well. There are a few points around the superiority to gold that can be made very well, and that's one of them. The other is like, how do you transport it? And there's these funny stories that I found on the internet of people traveling across borders with gold, and they've literally stuck it, up themselves to hide it. Like you don't have to do anything as extreme as that with Bitcoin, and that is actually not a scalable solution. Like maybe you can do that for a few $1,000s worth of gold, but like if you want to take $10 million worth of gold, it's just no way.
Yeah, a few months ago there was this when Europe started to dislike the US, I think it was Germany who said like, oh, we need to get 100 million of gold from the New York Federal, like the New York Reserve or something. So I asked Grok, okay, how long does it take and what does it cost to repatriate 100 million in gold? And the interesting part is that, like, it's funny we talk about this, right? If America sends back the gold, Germany has to smelt it and recast the bars in order to check the verifiability, right? Just that is a wild thing. So I asked Grok, okay, like how long does this take? What does it cost, etc.? And it ended up with a cost of like 7 or 8 million, and you would do it by boat and you go back and forth or something like that. And then I said, okay, now do Bitcoin, right? And it's like $4 in 10 minutes. So that's why I think it's funny, because it's just so in your face. But that's also why this asymmetric opportunity is so hard to see, because it is right in your face. It sounds too good to be true. I think it's also because many people, including myself, have never thought about money or store of value or assets or like how do I do it. But once you see it, it's just, yeah, like I said, I think it's just incredibly entertaining. And I wanted to ask you about, you talked about the path dependency of Bitcoin. I learned about this term some years ago, and I thought it was interesting you used that too. When we look at all the stuff that happened between the article and now, FTX, the whole idea of U.S. strategic reserve, yes, no, whatever, like just El Salvador. Do you think Bitcoin is following this path? Or did it find a shortcut? Like where are we on the path?
So path dependence, I think, is one of the most fascinating ideas in economics and finance. And it's kind of this idea that people's expectations of the future are really strongly guided by what they've seen in the past, and especially the recent past. And that means that people, this is especially true for something like Bitcoin, where there are no kind of cash flow fundamentals. With most other assets that people own in their portfolio, stocks and bonds and real estate, they have cash flow. So if something drops a lot, the price of a stock drops a lot, but it produces a lot of dividends, the market will correct back eventually or pretty quickly to reflect the fact that the valuation is based on its cash flow. But Bitcoin, because it doesn't have any cash flow, people's view of whether it's overvalued or undervalued is really dependent on what's happened in the recent past. So if Bitcoin goes to say 100,000 and then it drops to 70,000, people's view of what Bitcoin is can change dramatically. People who don't really understand the fundamentals of why it's better money, they will think, oh, Bitcoin was super overvalued at 100,000, and this whole thing is kind of a scam. And path dependence also creates this other weird perversion, which is that people will see past prices of Bitcoin and think, oh, it's really overvalued now. Like, I know this guy from 2013 who bought in at Bitcoin at $100. I can't possibly buy in at $100,000 because I'm really late. And this is, again, path dependence, where people are forming views about the value of something based on the path it's taken in the past. This is all like kind of a way of saying there's a lot of psychological expectations in price formation of Bitcoin. And what I like to point out to people is that the right way to think about Bitcoin's price is it's just a function of its adoption as money. The price goes up as more people say, hey, I want to keep some of my savings in it because I see this as a better form of money. And when the price drops, it means that people have kind of lost a bit of confidence in that, and they sell, and maybe there's fewer people who are holding Bitcoin. What you get, though, in adoption is you get these speculative manias where people get overexcited and then they start piling into Bitcoin not because it's a kind of a better store of value, but just because they see the number going up and they want to be part of that appreciation. And because they don't have any fundamental understanding of it, those people get washed out. And then they look at the price and say, well, it was much higher, now it's much lower. The whole thing was a scam. And that's another part of path dependence, is just looking at the prior past and making a determination of the fundamentals of Bitcoin based on that.
There's a lot of talk, I think, about adoption. I really like the power law models. Of course, there was like stock to flow. There's other people that talk about, S-curve adoption. I think you are a bit more in that camp, but I'm not sure. Yeah, how do you view that? Like in 2026, this idea of more liquidity incoming, the US has to do that, although they're attempting all these other things to kind of pay off the interest on the debt with tariffs and stuff like that. But what's your idea around how the rate or the curve of adoption, or however you want to call that, how that it's going? Like where are we at?
Yeah, I am generally very hesitant to subscribe strongly to any model, because I think we've never seen an economic good be monetized in real time like we're seeing. And so we should be students of this process. And we've learned some things. It looks like in the early part of the monetization of an economic good, it looks like it goes through these hype cycles. And the adoption kind of goes to this crescendo where people get very excited, and then there's a crash, and then there's a plateau which is at a higher level, and this has happened a few times. I do worry that people too strongly try to fit to a model and then get really disappointed that, hey, we're not tracking the model. I think that happened with stock to flow. I think it might happen also with the power law model. I don't know. I don't know what the speed of adoption is. So I personally give a lot of leeway. The way I think about it is in terms of fundamentals. Is this fundamentally better money? Yes, it is. Is the comparative advantage big compared to its nearest competitors, gold and fiat money? Yes, it's huge. You can do things with Bitcoin that you cannot do with either of those other forms of money. To me, those fundamentals tell me that at the margin, there will be people who will choose to switch their savings from those competing forms of money into Bitcoin. The speed that happens, how the cycles play out, I think it's very dangerous to get too wedded to a particular model. And then, because I've seen over the years so many people get blown out of Bitcoin because they became really wedded to a model. And when it didn't fit the model the way they wanted, they're like, oh, this is all over. And it's like, no, this is not all over. It's not happening the way you thought it would happen. But when I look at Bitcoin at, I think it's 91,000 right now, it's kind of astonishing for someone like me who's seen Bitcoin, from 2012 when the price was about $5 or $10, to have a value that high still feels really astonishing to me. When it gets to $1 million, does it get to $1 million in 3 years, or does it get to $1 million in 10 years? I don't know, and I think If I was someone who believed in models really strongly, and my model said Bitcoin should be at $1 million in 3 years, and it didn't get there, then, I might bail and lose the opportunity of like a 10x in 10 years. And a 10x in 10 years is a huge win. Like, there are very few investment opportunities where you can get a 10x in 10 years. So that's my perspective on it. In terms of where we are, I still think we're at the very earliest stages of Bitcoin's adoption. We talked about, I think the total penetration of Bitcoin in any meaningful sense where people have some decent amount of savings in Bitcoin is still in the single-digit percentage points. So I think that Bitcoin could get to 5 or 10%, and it could do a 10x from here. But when that happens, I don't know.
In the US, they're talking about a possible treasury, right? We had El Salvador who did that, but that I don't think was a meaningful country in that sense, right? Like if the US would actually have 500,000 Bitcoin, or maybe even lock up like 1 million Bitcoin, do you think that accelerates the unit of account stage, or does it actually do something bad, perhaps, where there's like this real supply shock and other countries are hoarding? Like how would something like that influence this next stage of medium of exchange? Or is medium of exchange, unit of account, or is that something that is just so far away that it's kind of like unpredictable?
I think it would certainly accelerate Bitcoin's establishment as a deeply held store of value. Nation states owning Bitcoin, I think, would be the equivalent of central banks buying gold. It's a signal that the most powerful political entities want this thing. I do think that that's still a long way off. And, in my book, I gave a timeline for Bitcoin becoming the world's monetary base of 50 years. And that, the article was written about 10 years ago now. So maybe 30 or 40 years. I that's what I think of as a timeline for adoption. One of the points I made in my article about nation state adoption was that I thought it would be dictatorships and countries with very strong executive control, which would get into Bitcoin first, because it's very difficult to make executive decisions in a democracy when you have lots of competing interests and people want to do different things. Whereas if you're a dictator, you can just say, hey, we're buying a bunch of Bitcoin. Now, I'm not going to say Bukele is a dictator, but he does have enormous political power, because he had the support of the overwhelming majority of people in his country, which gave him the executive power to go and say, hey, I'm just going to go buy some Bitcoin. So I think that's why he was able to do it. In the US, it's actually very difficult to do this, because you have a country which is very polarized. Half of the country is, left-wing, and half the country is right-wing, and they really, at the moment, really don't like each other. And anything that the Republicans want to do, the Democrats want to oppose, and vice versa. So it's very difficult to make an executive decision in the US. And I think the same thing is kind of true in Europe too. And so in my book, I said it would be the Western democracies that would be the last to adopt Bitcoin. And I think the first are, Bukele, who has probably 95% approval and can do whatever he wants. I would bet that North Korea has a lot of Bitcoin, that they have acquired it through nefarious means. I would bet that there are, part of Maduro's regime in Venezuela that have a lot of Bitcoin, because they were basically looting their country of oil and probably wanted to put it in something that was valuable that they could take if they ever had to escape. So I think that's how I thought nation-state adoption would happen. I thought, unfortunately, I said it was unfortunate in my book, it would be the Western democracies that would be last in adopting Bitcoin, because they just simply don't have enough executive power or control to be able to make a big decision like that.
Mm-hmm. You also talked about, right, so the longer something exists, or, well, it's like the theory that the expectation of the future value is kind of correlated to its age. Right, so the longer Bitcoin exists, the more valuable it becomes. At what price or event do you think your bullish case becomes so obvious that all the skeptics will just simply stop fighting and be like, okay, now I'm on this train? I know we thought that would be like 100K, right? Like, people that were early always thought like, 100K would break the internet, deafening silence, right? I still think there will be deafening silence at like 400 or 500K. But yeah, what do you think? Like, when is it going to be super obvious?
I don't think there will be a breakthrough moment like that, because I do think that Bitcoin is unique and different to gold in the sense that its ownership distribution is very different. What I mean by that is there's still a lot of early whales who still own a large percentage of Bitcoin. And at some point the price gets higher and higher and they think, hey, I've got 99 99.9% of my net worth in Bitcoin. I need to sell some of it. And I think 100K was one of those psychological marks where there were people who had held Bitcoin for, say, 12 years or longer than that, and it got to 100K, and they decided this is the point where I want to diversify my Bitcoin holdings. And I think there's pretty strong evidence that there's at least a handful of mega whales. One of them sold $8 billion worth of Bitcoin with Galaxy. And I actually think this is very healthy and it's natural. This is what monetization looks like. It's the distribution of a monetary good into the wider population. That cannot happen unless the old holders of Bitcoin decide to sell. It just took a long time. They were waiting for something. And a lot of them were waiting for this magical number 100K, and that's because we're human and we've got these weird kind of notions around, magic numbers like 100K. It's special because it's a round number in base 10, and that triggered a lot of selling. So, I was of the camp that when Bitcoin broke through 100K, it would rocket up to 150 or 200K very quickly. And I'm happy to admit I'm wrong and learn from that. And what happened was that you had people who, a large chunk of supply that became available at 100K. And what we're doing now is we're working through that. We're working through the supply from people who, this is a meaningful amount of value for them that they've built up over a very long period of time, and they want to diversify or they want to improve their lifestyle because they were living relatively frugally for the last 10 years just holding onto Bitcoin. That's totally fine, and that process takes some time to play out. Does it take 1 year or 2 years? I'm not sure, but I think that's what's happening right now is that we've gone through kind of a distribution of supply that was pretty significant. But the good thing is those Bitcoins that were sold by those whales can only be sold once by them. Now those whales are basically eliminated from the market, and those Bitcoins are held by people with much stronger hands whose cost basis isn't, 20 cents or $2. Their cost basis is like $100,000.
Yeah.
And they're going to hold Bitcoin probably until they see a huge return, which is a 2x or a 3x. So they're going to be much stronger holders for the path that takes us from 100K to say 300K. But we still need to work through the supply, and we won't know until Bitcoin starts moving. And once it starts moving again, we'll know, okay, the supply has been cleared. We're ready to move. And then when it moves, it's going to move quickly. It's going to do one of these things where it jumps from like 100 to 150K in like a few months.
Yeah, the biggest signal of that is that that 8 billion was bought, and we didn't really go down. I would say, what was the bottom? Probably like 82-ish or something. Where I've had. I think 80% drawdowns, which were gut-wrenching, right?
If you've been in Bitcoin long enough, you might be looking at this and saying, this is not even a bear market.
Right, yeah.
But I think the case can be made that 2025 was the bear market for this cycle, which to me actually makes me a lot more bullish about 2026, because I think we've actually experienced the bear market and it got pulled forward. It got pulled forward because we've seen a bunch of cycles, and I think people are just anticipating, hey, this is going to be the end. I want to get out before everyone else, and it pulled the bear market forward by a year.
See, and that's why it's so funny, right? Because if you just study and chill, then you don't have all that stress of trying to play and all these things. All right, I just wanted to wrap up with three short questions. So if we have this conversation again in 2030, what do you think is one thing in your original thesis that you think would be considered common sense by the average person on the street?
I think that Bitcoin is superior to gold as a store of value, and the properties that make it a superior store of value are much more obvious to everyone. Like, hey, I can send my value across the world without anyone's permission as easily as sending an email. I can't do that with gold. I think that it will be obvious that Bitcoin is superior to gold.
All right. And as someone who's been studying Bitcoin for well over a decade, what is a spicy point of view you have on Bitcoin that you think not a lot of people share with you?
A spicy point of view. One of the early spicy points of view I had was that Bitcoin wasn't important because it was anonymous money that you could buy drugs with. It was important because it was a monetary base that couldn't be inflated. And that is much more profoundly important to the future of our world and humanity than being able to buy drugs in an online anonymous market.
Love that. All right, last question, and I ask everyone the same question. What is a core belief that you will never let go of?
Core belief. I think human freedom is the most important thing we have, and we should all fight for it because it's very fragile and very precious. And if we don't fight for it, every generation has to fight for it. You can't take it for granted. So do everything you can to explain why human freedom is important, and defend it for you and your kids and your family.
Awesome, and well, thanks so much. I really appreciate your time and really enjoyed the conversation. So hope to stay in touch, and let's do it again. Thank you.
Thanks, man.
Cheers. I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.